Hey everyone, and welcome to episode 2 of We Study Bitcoin. I'm joined again by Steve, and on this episode, we dive further into our discussions on Bitcoin miners, some of the questions we had from previous weeks, and some questions that came up during the week. Hope you enjoy the episode. It'd be great if you could give us a follow on Twitter under We Study Bitcoin and hit the subscribe button on Spotify. Thanks. How's it going, Steve?
Hi Mike, how's things?
Good now. Good now from me. Had a good week. Got plenty of reading done.
I'd say you did,
How
yeah.
about
All
yourself?
set for week two.
put my homework in all right.
Yeah.
Very good. So we're going to continue on about some of the stuff we talked about last week, Steve. I know we talked a good bit about Bitcoin mining. I know we had some questions. You came up with the suggestion after the episode that we'd look a bit deeper into the actual mining centralization. And you sent me on some quite interesting articles that you managed to dig out. So
Yeah.
I think the first one we can talk about is called Miner Centralization. It was the article was called "Too Big to Cheat: Mining Pool Incentives to Double Spend in Blockchain Cryptocurrencies." So this
Yeah,
is
these are
fairly
very simple, short, easy to digest articles without major statistics. Probably a breeze for you, I'd say, Mike.
yeah, my junior cert level of maths wasn't quite up to the some of the formulas that were in this one, but
Yeah,
yeah, this article was substantial. It was
yeah,
40 pages. I think the author was George Soria and Vile Savolanian. Probably
yeah.
butchered that, but so
Can
what
we
did you
before
think of it, Steve?
I suppose
Yeah.
like even before we went into the article, would it be worth kind of even just talking about how mining works and why we mine, or is that too basic, or should we just kind of, what do you think?
No, I think go for it. Yeah, it's a good starting point.
Yeah, well, Bitcoin mining, if we try and explain it in a really simple form without getting too in depth in it. So, miners compete to solve a mathematical problem. Okay, this problem is very difficult to solve and involves expending a lot of energy, but it's very easy to verify when someone gets the correct solution. Okay, and that's what nodes do. Nodes will verify that the transaction or that the solution is accurate. Um, and the reason that miners will expend energy to solve each block is because they get a reward, and the reward is in Bitcoin. At the moment, we have a block reward, which is a fixed amount of Bitcoin, which is awarded to each successful miner, and then we have transaction fees. So everyone who wants their transaction to be included in a block agrees to pay a transaction fee. And there's also competition here in that if you want to get into the next block, you will be willing to pay a slightly higher fee. And that kind of feeds into the game theory of Bitcoin and the idea that as the block reward reduces, and that transaction fees should increase.
Yeah, so I guess to state up front that this article was really looking at one aspect of where centralization could be bad, and that was on something called a double spend, and whether
Mm-hmm.
miners would have an incentive to actually be fraudulent and perform a double spend on the network.
Yes.
So just to explain what a double spend is. So if you had an
Yeah.
attacker and they used their Bitcoin to purchase some goods or whatever, the seller then observes the transaction is included in the blockchain. So the seller will
Mm-hmm.
then wait for a number of confirmations. So for the actual transaction to get solidified on the chain, it takes like five confirmations before that is set in stone.
Mm-hmm.
So the goods then are released after, say, there are five confirmations. So at the same
Okay.
time, the attacker is privately working on an alternate chain in which the original transaction is made to the attacker instead of the seller. So that basically creates a fork in the chain. So after receiving the goods, the attacker continues to mine the alternative chain until, and the goal really is to make that alternative chain longer than the original uh, blockchain. And
Yeah.
so that's how it comes into consensus, is it'll always take the longest chain. So that'll immediately broadcast all the work that the nefarious attacker has done,
Hmm.
and more miners and nodes will then start picking up on the longest chain. So once that fraudulent chain gets accepted as the main ledger, that's when double spend has happened. So the
Sure.
transaction has actually been spent twice, and
Hmm.
there has been they've circumvented the system of consensus to retrieve the funds fraudulently. So that's what double spend is, and in
Hmm.
general, it's a very expensive attack because what you need is at least 51% of the network,
Of the
and usually
mining power, yeah.
because of the mining power, sorry, Steve, and usually because the blockchain is so long and the amount of transactions you need to confirm it, somebody is going to notice this and they're
Yeah.
just going to discard that block. So
Yes.
it's a very difficult and expensive attack to pull off, because essentially, if somebody is going to do it or try to do it, they need to build up the infrastructure to do that. And if you look at the current mining power or hash rate on the network at the moment, to get 51% of that, that initial investment in infrastructure, in electricity, is substantial.
Sure.
And you're obviously paying for that electricity for the duration that the attack is going to last.
Yeah.
So really, what this article was doing was there is there an incentive for mining pools to actually double spend, because it looks like, okay, this is an area of attack.
Hmm.
So the conclusion of the article was, well, it's not financially viable for
Yeah.
them, because the really all that it does is it tanks the economic value of Bitcoin,
Yes.
and really they're left holding something that's now is worthless, because at the end of the day, if proof of work doesn't work, Bitcoin doesn't work.
Yeah. Well, and that's part of the game theory of Bitcoin, isn't it? That these miners are so entrenched, and their value or their worth is so tied to the value of the underlying token, and the value of Bitcoin, that anything that they do which can potentially damage Bitcoin is it's you're wounding yourself, so there isn't any incentive there to attack the system. It would have to come from an external source, someone who's not already invested in it, and that's the problem. Is the capital expenditure or the opportunity cost to get in there is so prohibitive. It's very difficult for anyone to get in and do that.
Yeah, that's it exactly. It just doesn't make sense. The points they put forward anyway, for miners to turn against the rest of the network. Like, there's no future in it for them. It's a one time
Yeah.
play really,
Yes.
and that's it.
And when they do it, they naturally destroy the value of Bitcoin, and the only way that they can actually extract value from this double spend is if the Bitcoin that they steal essentially is worth something. So it makes no sense to damage the Bitcoin network.
Yeah, I didn't really. Again, I didn't understand all the maths in it, but the general theory makes sense. It's one I've heard probably since day one of getting into Bitcoin, because it
Mm.
was always a question like, what keeps the miners honest? Like, why won't they turn rogue for their own purposes? But it's one that's been, I think it's fairly well accepted in terms of that issue anyway, of the
Yeah.
the double spend. There are some other. Do you have anything else to add on that?
Well, I'm not sure that we probably don't have time to talk about it today, but this was an interesting thing. We mentioned it briefly the last day, that eventually Bitcoin will move to where the reward for miners is not primarily from the block reward, but is primarily from the fees. And there are some interesting theories that will affect the security of Bitcoin, and because it will change the incentives for the miners. Okay, because at the moment, every block that you mine has a guaranteed reward. There's that guaranteed Bitcoin reward, and the problem is that if you move to transaction fee only method, you may have some blocks which don't reward you anywhere near as much as another block. So a block where transaction fees or people are not willing to pay a lot of fees, and actually the miners may not be incentivized to mine that block, or they might be incentivized to deliberately not mine that block and down tools and maybe not mine and affect the security of the network. So and that can lead to some interesting situations where you might get miners deliberately where they might be incentivized to fork the chain. And again, obviously, if you're getting multiple forks in Bitcoin, not that it's necessarily a problem as long as you have one dominant chain, but it leads to a very messy situation. So I think that would be something that would be, I think, would probably take a whole episode to dive into it, but that would be something worth looking at.
I think it's definitely worth looking into, and I've often thought the other side of that is from the user's perspective in terms of what happens to fees then. Does
Yeah.
it become viable to send small payments? I know you have Lightning and all that,
Yes.
but in terms of actual layer one transactions, how expensive do they come to get them into to get
Yeah.
actually included in a block?
Yes. And that's a problem, okay? Because in order for the transaction fee system to work for miners, okay, you're going to have it so that each block is kind of filled before you actually try to mine it, so it's full of transactions and that there's always a demand there. And the problem is, if there's always a demand there, does it get completely congested, and do you end up waiting days or maybe never get confirmed because there's just such a demand for it? Now, as you said, I think the idea is Lightning is going to take a lot of that away, and the reality is nobody really knows how this is going to work out. I mean, at the moment, you have Segwit and you have Lightning, and we talked about again briefly, the mempools have been empty a lot of the time, or certainly nowhere near full. So there needs to be a massive change in that, and the whole narrative of Bitcoin as a store of value, hodl, never spend. Well, the problem is if you never spend, you won't have any transactions, you won't have any security. Look, at the end of the day, if you have an actual um, Bitcoin standard and everything runs on it, I mean, I think there obviously, I think that it's likely there will be enough transactions, but at the end of it, it's all conjecture and supposition. None of us really know. That's the problem.
Yeah, I guess like this is an open question. I don't know the
Mm.
answer to it. And is it in 2140 once all the blocks are mined that at that stage they move to transaction fees only, or would you think it is a much more gradual thing that in the next, say, what is there, 1 million blocks to be mined or something, or is it 2 million left?
Yeah, there's at least two anyway.
Okay, and so like, do you think it's something that comes into play in the next 10 years where they start, that because
Yeah.
after the next halving, say, what's it going down to 3.25 or
Well,
3.17?
like if Bitcoin does what I think it's likely to do, I don't think it's going to be a problem in the next 10 years. But I mean, if the value of Bitcoin stalls for whatever reason, if the number stops going up, well then yeah, it becomes a problem very very fast.
Yeah, it's definitely one to look into. I know you sent a couple of articles that I didn't actually get to this week, but maybe we can talk a bit more about that next
Sure.
week or the week after.
Yeah, sounds good.
Um, The next article was by Shinobi. I think it was fairly recent, maybe a year
It's
ago.
in,
E-
it's in Bitcoin magazine.
Bitcoin Magazine, yeah, and how centralized is Bitcoin mining really? So I thought this was a pretty good article. It broke it down into different segments.
Yeah.
I'll just list out the segments: mining pool coordination, mining equipment ownership, geographic distribution of equipment, the second-hand equipment market, manufacturing market, and energy production.
Hmm.
So he has it built out like a totem pole. So there's if you can't get past the first one, that's a
Yeah.
bottleneck, and
Yeah.
it's the more important ones are first. So again, it's the mining pool coordination that we talked
Yeah.
about, the centralization of that. So basically, the mining pool is the one that gets to control the transaction selection for the blocks, so they get
Hmm.
to divide that among the miners. So if that is centralized, it makes it a definite, very visible area of attack. Um, so one of the theories I was thinking about, and I just saw mentioned in a few other places, like really, if you have that much centralization of that much hash power in one area, I would say things like legislation and government demands are one of the biggest worries.
Yep.
So, say if there's a miner connected directly to an energy provider,
Hmm.
like, and there's pressure put on that energy provider, or court orders, or an outright ban on providing energy to certain jurisdictions in America mainly.
Yep.
Like, if you're taking that much hash power off the network, um, it's
Yeah, you're right. Sorry, I don't mean to cut across you. You're right. I mean, look, we obviously had the case study already where China went and did it. It was all the China FUD, China going to ban Bitcoin, blah blah blah. And eventually, they banned the only part of Bitcoin that you can even really think about banning, and that's the mining. And a massive amount. I mean, most certainly the biggest pool of hash power was in China, and I mean it's pretty amazing that I mean if you were using Bitcoin, it didn't matter, it just didn't matter at all, and the hash power migrated, and within 6 months or a year, it was kind of back up to where it was and reaching new all-time highs. So I mean that's encouraging, wouldn't you say?
so that absolutely, and that was 50% of the network went offline. So there was huge majority in China,
Yeah.
where there was 50%. So actually, on that point, there was another article by Bob Burnett. I think he owns a mining company, actually, a
Okay.
small kind of bespoke miner in the
Okay.
US. And again, this was in Bitcoin Magazine. And I will
Mm.
go back to the previous article, but this ties in nicely.
Okay.
He wrote an article called Satoshi's Heel, is mining infrastructure a vulnerability that could take Bitcoin network down.
Yeah.
So he did talk about the migration of hash power out of China, and he said, it was 50%. But he seems to have done the maths on this, and he came up with two nightmare scenarios. One was absolute worst case scenario, and a second was slightly less bad, but it's still pretty bad. So he calls some of these consolidated miners in big pools elephant sites. So they'd have 10,000 plus servers. The vast
Hmm.
majority of the power. And he was saying if there was something like a government crackdown, and it was choreographed geographically, so they were taking all the big elephant sites down at the same time, and you hit a 99% of hash power.
Yeah.
It initially it would become 99 times more difficult to process a block.
Yeah.
So, okay. So we know that every 2016 blocks there is a difficulty adjustment, right? So
Sure.
you would expect that, okay, after that
Two
amount of
weeks.
time, yeah. But the issue is, if you have taken 99% of the hash power uh, off the network, it'll actually take 3.8 years to get to the next difficulty adjustment, because it'll
Oh.
still be chugging away at the existing blocks. I
Okay.
thought that that's not something I'd seen before.
That's not something I ever
I
considered.
but he did say now it's an extremely unlikely scenario, but I guess these are the ones you have to look at.
Yep.
Um, so yeah, 3.8 years for to get to the next difficulty adjustment, and the
Hmm.
problem there is it can only adjust up above or below four times the current difficulty level. So you're not
Okay.
even going to get it down to what would require it to chug out the next block in the 10-minute time frame on the first go. So even though
Okay.
the time would come down, it would still be an extremely long time. That's when you'd imagine that somebody would have the capital to invest in the infrastructure to perform a double spend attack or a 51% attack on the network, because if you've lost 99% of the hash power.
Sure. Makes sense.
Yeah, I thought that was a quite a good article. So some of the solutions that have been proposed around
Solutions to
the
the
network,
disaster scenario.
well, solutions to the centralization mining
Okay, sorry, go
problem,
go.
um, was there was the I think it was, let me get the guy's name. Matt Corallo had a better hash, which basically allowed miners to select their own blocks,
Mm,
but they weren't able to implement that. So they've worked on something called Stratum V2.
okay.
So it makes data transfers more efficient, reduces the physical infrastructure requirements for mining, and increases security.
Hmm.
Additionally, it introduces three new sub-protocols that allow miners to select their own transaction sets through a negotiation process with pools, improving the decentralization. I haven't read the white paper on Stratum V2, but that was one that
Yeah.
was I saw mentioned a couple of times.
Okay.
Uh, did you have any thoughts on that point about the mining pool centralization?
Uh, yeah, like I do think it's just I think because of the cost of the equipment involved, like in the article we're discussing, there's a number of points where it becomes an issue. You know, there's the equipment itself. In that, number one, the actual equipment, the ownership becomes centralized naturally. And you mentioned there are, mining operations which take over acres, and obviously, very obviously, they have a physical footprint, and it would be really easy to just for a government just to step in and go, right, guys, we're shutting down operations. And not only that, they're centralized that way, but they're also centralized in terms of their dependence on national power or national power grid. So I mean, they're easy targets, and then you go with the equipment, and even accessing this equipment is difficult. Like I thought the example there, what was it? Bitmain, was it?
Yep.
When they were manufacturing the ASICs, and there was a SegWit fork, and they threatened to stop selling their miners to anyone that supported the SegWit fork. So it was just interesting that a player with that kind of power could have that kind of influence on the network.
Yeah, even on the consensus rules, like that they were trying their best to get them enforced. Like it was a similar story back during the block size war as well,
Hmm.
which was very close to you know
Yeah.
to happening because the producers of the equipment, it is a choke point on the network,
They have a big say.
and
Yeah.
like really there's only one solution to that is if they start completely decentralizing that part of it. I
Mm.
did a little bit of reading on Intel's new one that
Yeah.
I think it's coming out this year. I looked at some of the specs and all that was good in comparison to comparable spec miners. It seemed good. But
Yeah.
I did see initially it was only for select customers, that it wasn't anybody could just go on and buy one.
Mm.
Um, so I haven't
But
heard
like,
anything on.
if you're a government, right, and you're in power here, and you've got control of the money, and you can decide what happens with the money, and you can inflate where you want to, you can do what you want, um, and Bitcoin is really creating a problem here because people have somewhere else to store their their wealth, but Bitcoin mining is by far and away the easiest target. What encourages me though is, as time goes on, Bitcoiners are a resourceful group, and not only are they a resourceful group, they're also becoming a much more wealthy group. Um, and I think there are fantastic ideas, and some visionary ideas, or maybe crazy ideas, coming out from the community. I don't know, did you see Jason A. Williams posting on Twitter about buying a nuclear powered warship to mine Bitcoin on the seas?
I didn't say that, no.
Which is crazy, but But is it really crazy? I mean, if you want to have a source of power, that is not seizable and is not
In
subject
any
to the
it's
laws,
not in anybody's jurisdiction.
like, it's pretty, crazy, but it's pretty genius, isn't it? I mean, if you've got a nuclear power plant powering it, I mean, you can probably put a significant amount of hash power down there. They're going to have to blow up your boat, So, which I'm not saying that couldn't happen. Yeah, of course it could happen, but I have faith in the community that they'll come up with solutions similar to the mining. I think if Bitcoiners are serious about Bitcoin, and it's easy to say as someone who has no finger in the mining pie, well, then they'll work on coming up with decentralized mining solutions and making Bitcoin as robust as they can and as resistant to attacks as they can, And I mean, the Chinese ban is just one example, and hopefully, I mean, from what I understand, there are still people mining in China, so they've obviously found ways around it. And I suppose the way Preston Pish puts it is. It's like is it Medusa who has the heads, or is it a Hydra or
Yeah.
something? It's like, yeah. So it says you chop off one of the heads and it grows two or three back,
Oh,
and
that's the
maybe
Hydra. Yeah.
the Hydra, yeah. Maybe this is how Bitcoin works, So um and maybe that's just uh naive optimism about it,
But
but yeah,
what
it's
really was that really was an acid test.
sure,
When you saw 50% of the hash power come off the network, like
yeah,
from my background, if you look at any industry and you took 50% of their compute power down,
hmm,
that doesn't just keep mining blocks or continuing with its core business. That's a 6 month, 12-month, 18-month rebuild
yeah,
before everything gets back up to where it was. And I think
yes,
pretty much in February, like it just Bitcoin passed the peak mining power that it had anyway, that so many
yes,
miners had just come online. And you look at states like Texas, which have really embraced it. Just can't even imagine what it looks like out in some of those deserts at the moment. Like there's just mining factories going up everywhere.
yeah. You're right. And I mean, if we go back to Bob Burnett, you brought him up, and his article about the disaster scenario where 99% of the hash power comes offline. I mean, really, if you're going to get to a disaster scenario like that, what that is going to take is it's going to take mass coordination of nation states to do something like that. Would you agree?
Oh, absolutely. And when have we ever seen
Yeah.
something like that work?
When have we seen that? And realistically, if something like that is being planned, well, Bitcoin's already succeeded. If they're actually, plotting to that level where they really want to take it down, it's succeeded beyond anything we can imagine at that stage. And if it succeeded to that level, you can bet there's going to be a couple of countries who got in there early and decided to adopt it and have actually become much more influential and more powerful. Or maybe it's the United States do it, which probably is the most likely thing. And retain their position, as the global hegemon or whatever. Um, so there's that game theory that, well, look, if you adopt it and you actually embrace it, you get ahead of the game, and it's this thing which is kind of unstoppable. It's mathematical. It's just going to keep churning on no matter what you try to do. So you can get on board or you'll be left behind.
And I think, as you said last week, it's like they don't even need to believe in it. It's just that
Mm.
somebody else believes in it. They have to make a position for themselves that they won't be blindsided
Yeah.
or caught off guard.
And that's why you get guys
Like
like
I,
Ray Dalio saying, "Oh, stick a couple of percent of your net worth into it." Like, I mean, if you don't at this stage, I mean, looking at the returns that it has given up to this point, well, you'd be an idiot if you didn't kind of take it seriously and go, "Well, maybe there's something to this." Let's put an allocation in.
Absolutely, and I think we'd be naive to think that there isn't some large companies that have been building a position over the last while. Like I'd be shocked anyway if if it turned out that no G8 or G12 country was actually building a position.
Think so? I don't know. I'm still like hugely skeptical. But we'll see.
Well, they're definitely not going to announce it. Like
No,
they're absolutely not going to announce it. Like if you
like
saw that
we could,
Christine Lagarde interview,
Could you imagine?
on
Could you
stage
imagine
where it
if a politician in Ireland came out and said, "Ah, well, lads, now we've been storing away a bit of Bitcoin there for the winter." Like, Jesus, they'd be lynched. Like,
they'd get a lot more credit from me anyway. There might be some forethought in there,
oh my
apart
God,
from
they'd
being
be.
told we're definitely not going in a recession, is all I've heard recently.
Oh, really? I've not. I have to say, I haven't read any news. So I have no idea.
Better off. So yeah, so just on the other parts there, there was the geographic distribution of mining.
Hmm.
I had a look on the mining pools on blockchain.com, I think it was.
Yes,
There was 20% was under unknown, so that's quite a chunk of the network, which
sure.
it was the largest chunk
But I mean,
that they
that's
don't
good.
know.
It's good.
It is good. Yeah, I don't know how they pull the data on that
No.
and why it's unknown,
Did
but
you notice that quite a lot of them, when they pull the data, there's a big chunk of mining going through Ireland?
no.
Yeah, it's obvious. Mining is not being done here. The electricity is too expensive, but apparently they're using data centers in Ireland. But I don't know which miner it is or which mining pool it is. But yeah, it's just interesting to see Ireland's name up there.
I didn't see that actually. That is interesting. Yeah, I don't know what they could be doing, like whether it's just yeah.
I don't know, but it is interesting. You wouldn't think.
Yeah,
Yeah.
they're 100% not mining here
No,
anyway.
no, definitely not.
Um, it's a pity. It's if we actually kept our oil and gas,
Oh, look.
we might have a chance.
Yeah.
So there is that. So I guess it's very hard to know. Like I know what happened in China. A lot of them went slightly further west to Kazakhstan and Mongolia,
Mhm.
so where there was cheap coal.
Yeah.
I know there was a lot there for a while, but Iran as well. I think they had quite a bit of hash power up to recently anyway.
Yeah.
But again, like what the most interesting part of this, I think, is the most remote areas
Yes, I
that
think so too.
there is power and you don't even have to tap into the grid, like
Yes.
that you're just completely isolated from everything and
Hmm.
you're just mining it there off. And it doesn't really matter if it's natural resources or whatever, but the more of those type of operations, definitely the better. I know they're unlikely to scale like what we've seen in those big factories in Texas and some in
Yeah.
Canada, but it's definitely like the more of them, the more secure the network is.
Yeah, and I mean,
Because if something, sorry, Steve, but if something does happen, those bigger miners, what you want is people to be able to scale up at speed.
yeah.
That able to recover that hash power as quickly as possible, and I think that really brings down the vectors for attacks on the network.
What's interesting about this, right? Well, sorry, one of the many, many, many interesting things. Okay, so the way mining is starting to go, and certainly in the states, where it's being increasingly tied into energy, and I know that sounds uh, obvious in that you need energy from mining, but what I mean is in terms of the resourceful use of your energy grid, where you have oversupply of energy and you have essentially, wasted energy, you have no buyer, and you have then these mining operations, which are often portable mining operations, which can be brought to different areas or whatever else, or you have energy companies who are now looking into mining Bitcoin in order to obviously maximize their profits, but also not to waste energy. And again, you had those gas mining operations where you're flaring off gas and you're emitting, tons of greenhouse gases into the atmosphere. And actually, with Bitcoin mining, you can convert most of it to CO2 instead of methane, and you are massively reducing the amount of greenhouse gases being emitted, and at the same time you're benefiting the company financially or benefiting the miner financially. And I think, sorry, Mike, just one before you jump in, and if this becomes something that's essential with most energy operations, it almost becomes a matter of national security, where in order for the American energy industry to function properly, you need to have Bitcoin mining. And if that's the situation, well, I mean, you can bet that it'll be protected, and that Bitcoin will become a matter. And you see some articles, obviously, it's from Bitcoiners and people who are completely orange pilled and a bit mad, but publishing articles saying Bitcoin is a matter of national security, and we need to start seriously investing and looking into this. What do you think about that?
I 100% agree with you. If you look at the fact like flaring and all, they're always going to happen. And what use is that at the moment?
Yeah,
Absolutely zero,
yeah.
right? So that's one use case. But the stabilization of the grid is massive. Like I
Mhm,
don't think, and that's something I know we discussed a little bit on the last episode.
mhm.
Um, but if Bitcoin miners are stabilizing the grid, it 100% does become an issue of national security
Yeah,
because if those miners go down,
yeah.
it affects the whole grid.
Mhm. Yeah, exactly. Or,
Yeah, no,
or, or, or maybe it's not viable for that company to continue providing energy unless they have a miner involved. So you have to shut down the power plant. So if you want to keep your energy plants running, you want to keep energy flowing out to everybody, well, you need the miners. So, um,
yeah, and at the moment, if an energy provider is providing more energy to the grid than they need,
yeah.
Bitcoin miner is the buyer of first resort. They're always going to take that
Mhm,
energy.
mhm. Yeah, yeah. It's interesting.
Um, Very good. Let me see. I think that was. Is there anything else? I think we covered energy, equipment manufacturing, geographic distribution, and mining equipment, and the mining pool coordination. Was there
I think
anything
no, I think
else you
that's
had
that's the
that
majority
struck
in
you on
that
that?
article. There's a few little things about second-hand equipment articles, but it's really just a short little paragraph. So
Yeah, I thought it was good. It was another article I read about by Shinobi as well. It was quite good. I didn't actually take note of it, but yeah, no, it's definitely interesting, and it's again, I'll just go back to our main point is like from my point of view anyway, it is the area of Bitcoin which seems most open to attack because it's open from you know as we said, the centralization of the miners, it's open from government regulation,
yeah,
it's open from other government nefarious activity. It's so visible, like like loads of people are running nodes, but you don't know. So the nodes are
yeah. I mean,
decentralized. You
there's
can always pretty
yeah,
much
there's this kind
rely
of
on that.
idealistic idea of Bitcoin in your head where everyone has started mining with their computer, and it's literally anybody, anywhere, all over the world, and that's as it gets bigger was never going to be realistic. So naturally, there is going to be some centralization. You just have to hope that because the security of Bitcoin is paramount, it's the most important thing, and decentralization is kind of central to that. Until I suppose until it becomes to a point where actually everybody in the world recognizes that this is obviously the caveat that this has to happen, that everyone recognizes that this is the store of value, and then everybody is contributing to it because it's essential. So we get there, then I suppose we have to worry less about who's doing it, but everyone will be doing it anyway.
There'll be plenty of other things to worry
Yeah,
about
yeah,
then.
but this is it. These kind of worries, in a way, they're so far out into the future, probably, that it's kind of it's kind of maybe a joke to try and predict what's going to happen, but yeah, we'll see. If the value of Bitcoin doesn't go up,
That's
like we
definitely
said earlier, these things are going to be a problem very fast. Bitcoin needs to keep increasing in value in order to
exactly,
maintain security as things stand.
exactly. I did see actually. I think it was on the last node article that I'm not sure who wrote it now. It just came out this evening. Um, that after the
Mm-hmm.
Terra Luna episode, where they released 80,000 Bitcoin onto the market, it put miners under severe pressure with the price drop that there was 10,000 Bitcoin released by miners. sold, which would usually be
Okay.
hodled at the end of the month. So I haven't looked through the figures. I checked Argo. I
Yeah.
didn't see anything on theirs, but I so there was definitely miners that needed to sell Bitcoin for operating costs in the last
Yeah. Yeah.
couple of months anyway.
Yeah.
And that's not sustainable, like because sure their whole business is to take, keep as much Bitcoin
Yeah.
as possible.
Yeah. Look, look, they will inevitably have to sell some. So look, it's a position that they're in. So
Good stuff. Just finish up there. Any interesting
if you're
articles
gonna
you read
ask
this
me
week,
this, if
Steve?
you're gonna
Apart
ask me this
from all
every
the
week,
reading.
I'm gonna have to be prepared. So no, there actually is a really good. I mentioned it earlier. It's actually someone's master's thesis. It's called the impact of transaction fees on Bitcoin mining strategies, and it is flawed, but it's acknowledged to be flawed, and there's some really interesting discussion points. So I'd like to go through that. We could chat about it next week.
We can talk about that next week. Yeah, I know you did send it on to me. It was at the bottom of my list, but I'll definitely get
Yeah,
to
no,
it.
it's good. I mean, there's some statistics in it that I could do without, but it's good.
Good stuff. So I'll tell you
Yeah.
what I read. Um, so I actually got you quite a bit this week. So the first one was Doomberg's article,
Okay.
Wide
Oh,
Awake.
I think I read that as well. It's one where he
Getting
references
spun.
Carl Sagan, right? Yeah.
Yes, yeah. So it's an interesting article, basically, that you can't question the science anymore. Was basically the core takeaway from it. Like, so whatever is scientifically stated now is written in fact, and it can never be
Yeah.
questioned.
We can't
Um,
question people now, Mike. That's not on
thought that
them.
was
And
good.
if people
Any,
have different opinions than you just have to tell them they're right.
I
Yeah.
have to tell them they're right.
Yeah.
Yeah, I have to agree with everything. Um, what was absolutely brilliant read, and I haven't finished it yet, is Sjors Provust's book. I definitely butchered his name. Bitcoin, a work in
Okay.
progress. So I've only got like two chapters into this, but from a technical standpoint, this has explained things to me better than any other
Okay.
book I've read. So the first bit I've done is Bitcoin addresses, how they're formatted, the reasoning behind um, how it's constructed. Um, Actually, we could do an episode on how Bitcoin addresses are constructed, the technical parts. Really,
We
really
could. I mean,
interesting.
I think we
What
would
was
lose
really
our two listeners. But yeah, we could do that.
we would lose our we would lose our two listeners. Um, but like what I really thought was interesting, I didn't know was you were actually able to send Bitcoin
Yes.
via IP address, so you could actually just send it to someone's IP address.
No, no,
Didn't
well,
know
not
that
until
was
you
a thing.
told me.
That
That's
was
cool.
amazing. The other one was actually, when you boot up your Raspberry Pi
Oh yes.
node, your Umbrel node or whatever for the first time, basically how it finds the other nodes and how it determines if they're
Mhm.
legitimate. So that was quite interesting, the DNS bootstrap and how it uses Tor to encrypt
Mhm.
the traffic. It uses the Onion router. But also the work that's been done on that, because obviously the blockchain is getting bigger and bigger, but the work that's been done on that it's not a full block sync initially now anymore, that it only looks at certain parts of the header
Mhm.
and it just downloads that and it goes through all the headers. But there's more improvements come to it. It's UTXO. It's going to look at that next, and once it sees a certain amount of block confirmations, it will, it'll validate your node to say it's
Very good.
100% synced. So that was interesting. Talked a bit on SegWit. So solve the issues with transaction IDs when they could be altered without invalidating the transaction themselves, and that's what enables Lightning and other layer 2 protocols, and also how it increased the block size up to um, 4 megs, usually about 2.5, but 4 megs upper limit, as the signature is not actually stored in the in the
Yes.
same header anymore. So essentially that's how nodes not
Yes.
running SegWit, they just discard that part and they
Okay.
continue to operate. And the last bit in that book then that I got to was the implementation of lebsec P256K1 instead of
Okay.
OpenSSL, due to speed and security. But highly recommended. I'll post a link to that in the chat if
Do
you're
you know what we
interested
should
in
do?
any of the
If we could
technical
like
aspects.
somehow hide some sort of link, in the end at the end of the show for anyone who actually listens through to the end, through all that rubbish technical shite that you spout on at the end, and if they go to this link, that they get like free satoshis for listening through to the end. That'd be pretty cool.
As long as you're providing them.
Yeah, yeah.
I'll be there.
Uh,
I'll be there, like just different wallet
I'd be
addresses.
impressed, or
It's like,
or maybe you
that's
could
weird.
you have something that they have to comment on the Twitter page with a specific comment. That'd be kind of cool. But anyway,
We'll try that. We'll give it a few weeks.
yes,
We'll give it a few weeks because loads of people are going to listen back in a
yes.
month's time. So last thing I read this week was a book, The Bond King by Mary
Okay.
Childs. Have you heard of it?
Nope.
So it's about Bill Gross. You've heard of Bill Gross,
Okay.
haven't you, in
Yes.
PIMCO? Yeah, so it's basically the rise and the absolute fall of Bill Gross. But really interesting book. Um, so I started today. So that is worth a read or audiobook if you prefer. Um, so lastly, I started today. I saw it in Nick Carter's article on the
Uh huh.
Terra Luna thing. It's called No One Would Listen by Harry
Okay.
Markopoulos. So it's about he's the Bernie Madoff whistleblower, basically. So how corrupt and even not corrupt, but just how shit the SEC is at their job, and how they overlook things and how they miss the basic
Okay.
things. I've only started that
Very
today.
good. Leave some
But
time. Leave some time to read our article
any
now about transaction fees on Bitcoin mining strategies, Mike.
it's my number one priority
Well,
now
if
for
I
for
get that read, I
the
will be
coming
doing
week.
well. So, uh, right.
Yeah, I was quite happy I got through the first one actually, the mining pool incentive to double spend. That was
Mm.
pretty in depth as well. I was when you sent the articles to me, I opened them all up and I was like, Jesus, there's two of those that are like
Yeah.
40
Yeah. Yeah.
pages plus.
Well, I mean, yeah, if you like
I was
the
like, all
Bitcoin
right,
magazine stuff, for example, is great, but it's condensed down to opinion without any kind of facts. So it's nice to get something. Okay, look, none of these studies are particularly super, or they're not meta-analysis or randomized controlled trials, but they're reasonable, and I think it's a good way to look at things a little bit more depth, and these are people who, if they've gone to the bother of doing this, they're really into this, they're really into Bitcoin and they're all about it. So I think it's a good way to look at it.
yeah, definitely willing to hear as many opinions. Well, to a certain extent, about the subject anyway, and that's one. Like we've mentioned it so many times, like Bitcoin mining, Bitcoin mining. Yeah, the last thing actually, if I didn't come across, I heard it on the Preston Pace
Okay.
podcast with James Levine and Greg Foss. They created a website
Mm-hmm.
called Looking Glass, which has got courses on just I think the course I haven't done the course, but it's basically on basic financial terms translated into everyday language from
Okay.
traditional finance. But there's what's really interesting, and you've probably come across some of the articles under deep dive because I kept hearing Preston Pish go on about yield curve
Sure.
control,
Sure.
yield curve control, and I was like, what the hell is yield curve control? So I came across one of the articles there by James Lavish, I think,
Mm-hmm.
which explained it really well. He also did another really good article on repo markets and reverse repo markets.
That's actually
10
really
minute
good.
reads,
They'd be a good topic to
but
discuss.
really,
They'd be good topics to actually look at. I know they're not Bitcoin, but they're
definitely,
kind of
I
helpful in
agree.
terms of understanding what's going on. So it'd be good.
Absolutely. It's just things that I don't suspect the everyday person spends too much time thinking about. And it's a phrase I've heard loads of times, and I thought I had an idea of what they were, but until I actually sat down and looked into it, it's like, okay, yeah,
Yeah,
I got it
yeah.
now.
I need to get them explained to me several times before anything sticks, and then explained several times more. But we get there in the end.
Get there eventually. All right. Thanks a million, Steve, and
Until next week.
talk to you
Thanks, Mike.
next week. Cheers.